Hey guys, just want to give a quick tutorial on Japanese candlesticks and hopefully convince you, if you are still using a line chart, to switch to using candlesticks because they show you a lot more information that can be helpful with your trading. So I've just got a couple of drawings here just to explain the points that make up the candle. So the tops of the wicks of both candles indicate the highest point and lowest point respectively. These wicks are optional, and if there's no wick, the top of the candle body and bottom of the candle body indicate the highest and lowest points. Now for a bearish candle, the open is higher than the close, meaning we started up here and finished the day down here, so the price went down. In a bullish candle, the open is at the bottom and the close at the top, indicating that the price went up. So that's enough with the candles. Let's have a look at the line chart of Tesla, just to be able to see if we can get the same information from a line chart that we can from a candle chart. So we can see there's two peaks here and there's some higher lows. So based on this, one would assume that there's higher highs and higher lows, so the price should keep going up. If we switch this to a candlestick chart, we can see while we did make a higher high and we're still making higher lows, we had these two doji type candles. So a doji is simply a candle where the close and open are very similar and there's a long body on either side. So we can see that the price tried to push all the way up to 965 and also down to 830 and closed just above where it opened for the day. The price then dropped, consolidated a little bit, and came up once again. This time it didn't get anywhere near as high though, topping out at 942 and closing even lower than it opened. So this shows a completely different picture from the line chart before. Still the exact same data, but because we have the extra bits of information, we no longer get such a bullish outlook, and that is then proven by the price subsequently dropping. I'll give one more example. So if we move over here, we can see that we have this move up, a little bit of consolidation, and then a move down. Just like before, we're making higher lows and higher highs, so one would assume that the price should keep going up. But if we switch over to the candlestick chart, we can see not only are we missing half this candle, but we have two very large red candles that are about 2 times as big as pretty much all the candles before it on the move up. So this is indicating that there's a very strong bearish momentum, and it's quite likely that the price will continue going lower. Again, it's a completely different picture from the line chart before using the exact same data. Hopefully that helps clear a few things up for people and I can convince you to use the candlestick chart. See you next time.